Hey gang, Kevin here with KDI. It is April 28th, 2026, Tuesday. Um, this is a grain update. We're going to talk mostly wheat, but all grains are moving right now. Soybeans are probably struggling most with some Chinese trade issues, but yeah, wheat's the star of the show. So the questions are: is this just a lone pop that's going to fail, which has happened before in this type of run in the spring, or are we having a more fundamental move here in these markets that is going to stick and give us some better opportunities as growers? So I'll tell you my opinion. You can do what you want with it. So, okay, last fall I noted that the longer term, the weekly and the monthly charts had all made closing ending patterns, suggesting that we were going to see better numbers at some point. It's taken its time to get going, but I think if you look back at those charts, which I've put in the reports, then we're seeing exactly that. We're seeing the moves happen. And when you're talking major moves and major closing patterns in the weekly and the monthly, you can expect longer duration moves. So, when I look at it, we should be in a bull phase, minimum of 9 months, if not, 18 months if it's a growing cycle. So, technically speaking, it looks very positive to me. It looks like we've turned the corner. We've got some better things in our future coming. Short term, it's more of a crapshoot. We got geopolitical stuff. You got war headlines that come out every hour that can change the trajectory a little bit, change the short term. To me, the positioning, as far as what's causing me the most grief, it differs by grain. Like with soybeans, it's my new crop positioning. How much soybean do I want? How many soybeans do I want to have sold in this environment at a price that's sub break even? That's the sticky one. I'm not happy with that. On the corn side, it looks pretty good. I'm happy with my position. On the wheat side, the old crop's giving me a little grief here. Granted, we're making great strides, and we've got some good numbers, especially hard red and the hard red spring, but not so much with white wheat. White wheat's still, stuck in the mud, and granted, it's better than it was, and it's higher now than it was at harvest. It's still not a price where I go, hey, we're finally breaking even. It's not. We're still $1 away from that. So that one's giving me some grief as what to do with that. So I'll have a better solution in my report, unless something comes out immediately. Then you'll get the text. So okay, so is this a short-term pop? Is this a longer term? Okay, so on the weather front, the big headliner is the Southern Plains. Okay, it's in our backyard. We know what's going on there. Not going to be much harvest activity in Oklahoma or Kansas or Texas. Kansas has still got a little bit of wheat left, but if it freezes again, that's going to hurt that too. So you got a lot of four-legged combines going already in the Southern Plains, and then if rains do materialize, then you're going to see them throw something else in there. You're going to see milo move in. You're going to see other crops take a stab at it. So easy to say it's a disaster, and but it's being factored in the market pretty quick. What's not such a factor is that I think matters is Europe. France has got a pretty awful streak going on. Their crop is going backwards pretty quick. There's an analyst I trust over there. He's sounding the alarm, saying we got problems, and the maps that I've sent you are showing that they were having problems. So that's another aspect to this rally. Another aspect is Russia's got some cold air coming. We'll see how far south those lows get and how cold they get, and if it does any damage or not. It's causing some problem with their spring wheat campaign. It's behind, and that could continue if the cold air stays put. There's also some dry stuff in Eastern Europe that's not getting any attention that probably should. That's a pretty big region on the global wheat trade. The other weather hotspot is, for wheat at least, is the Australians. The New South Wales Queensland district is just flat too dry to seed. On top of that, the fertilizer is priced out of this world, and diesel is too high, and so they don't want to seed it. You know, they're much more apt to move into, like say, the barley market took off first down there. Wheat's starting to move down there, but it's still not rewarding production. So you're going to see acreage down there really decrease. The guesstimate so far has been between 10 and 25% of their national acres, and you know, if this drought continues much longer in an El Nino setup, you're probably going to push closer to the 25% mark. That's very notable on the world scale. We don't have that much wheat in exporter hands, and so if we start cutting back that big of production, you're going to have a market impact. On the corn side, Brazil's got a big old dry spot in the middle of their safrinha corn harvest, or not harvest, their safrinha campaign. That's causing some problems as well, and you know, this is their dry season started early there, and that could make up for some of the good parts of the safrinha crop in the southern parts. So that's the weather side of the campaign. One other thing, you're seeing a lot of financial headlines. You're seeing advertisements about, you know, these weekly and monthly charts in the wheat market. It's like I say, I pointed it out last October that this thing is looks exceptional from a long-term buy standpoint, and you're seeing some financial firms echo that and throw you some recommendations on buying ETFs. So we're seeing some outside money move into these futures. We're seeing the hedge funds, which, you know, have traditionally been short wheat forever, we're seeing them switch to the long side. And if they get excited about it, if we keep the bull fed, so to speak, they can move futures a lot farther than people think. Wheat's such a small market, it doesn't take that many contracts to move it. So that is one thing to watch. So we've got the institutional money coming in, we've got the weather coming in, we've got very little producer sales because they don't have much to sell, at least in the districts that are dry. And then on top of that, you've got some big tenders coming up from some major producers. So you've got you know, the Saudis, the Algerians, the Egyptians. They are loading up on wheat right now. They don't want to be caught short. They understand the fertilizer setup. That's right in their backyard, and they are trying to position so they don't get a food crisis in their country. I thought we'd see that a little more broad scale. We haven't seen it really from the Asian markets yet. We'll see if those guys want to start covering their imports. How do you let $5 wheat go when you're a importer and you've got this fertilizer hiccup going? The market is strangely late reacting to news that we already know. It's silly, but I had this conversation last week with some hard red winter producers. Like, you know, we had that nasty freeze over the weekend 2 weekends ago, and then they factored all the rain out of the forecast, and we knew the frost did damage in areas that might not have been damaged in that earlier freeze, and it was guaranteed to be a big up day, and we ended up closing lower on Monday after that. And I called them and I said, you know, this is interesting. We're down with such bullish news, it doesn't make sense. And then, you know, we may have to let some stuff go if this thing continues. And then all of a sudden we got, you know, now we've gone up almost every day since that. So it's really silly, really silly futures. But point is, you've got demand, you've got importers buying, you've got, you're still not rewarding the producers for planting the stuff. The inputs are too high. You've got weather problems, and you've got the chart-based technical buying. You've got the momentum buying, which the computers is actually in our favor for once. So to me, there's going to be breaks in this thing that are going to be impossible to time, but the longer-term trend still looks positive to me. You know, we've got to reward production at some point. The theory that the world is flush in wheat doesn't hold a lot of water when you break China out of the balance sheet, and when you break the exporters into their own category. And you got to ask yourself, you know, how do you fuel more demand? Well, you keep the price low. Price has been low for a long time, and has punished production. So anyway, like they say, the cure for low prices is low prices, the cure for high prices is high price. It's always true, and you can distort it for a while, but in the long run, it's going to come out. So anyway, I hope that answers your questions. I'll probably put a pretty good technical discussion in my next report. You'll look at the charts and see what we're doing there. I'll also go over positioning. Be ready. Like I say, the stressor for me is the old crop wheat, at least the white wheat. I mean, if you're selling hard red and hard orange spring, you're happy because you're getting much higher prices than we've seen for a while. If you're selling white wheat, it's like, yes, we paid for our storage from harvest to now, but we haven't really added anything onto it since then. So Portland can play their dumb little game as long as they want, but at some point the Asians are going to demand it, and they're going to have to bid that thing up to get the stuff loose. So we will see, but that's all for now. So have a good day. We'll catch you another day.